Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 4th of August. All right, looking at the markets, a bit of a stalemate, right? We had that massive build-up of pressure with the, was it Wednesday's or Thursday's ADP employment numbers leading into the jobless claims yesterday. Sorry, Wednesday, then Thursday. Coming into Friday, it's the non-farm payrolls, right? Now, this is more of a flush out number, right? Bit of lots of noise, lots of banging, and lots of trouble. So just be aware of that. And I'll run through this very quickly. But US labor market resilient, productivity rebounds in the second quarter, right? To me, the news services are really clutching at straws here, right? Now, if you have a look at the equity markets, right, on a 1 week percentage change, bit of a tough week, and even the month, right? It's been a pretty tough month. But overall, they have had a not a bad result. Okay. Now when you come into looking at today's data, right, it's really down to one thing, because after yesterday's numbers, let me just sort of show you that just looking at yesterday's results, and this is always always a potential outcome, like the actual number, okay, for the initial jobless claims. We saw the day before's ADP national employment numbers come out much stronger, and we saw the dollar rally on the back of that, right? So the expectation here, right on, right? So that's, if anything, in this day and age, it's a little bit rare that you get that result. So the market stood down on that one, right? Nothing to do. And then you came down to, we had the factory orders and the ISM, non-manufacturing orders, or PMI, I should say. The expectations here, 2.2 for the factory orders, came out 2.3, right? Slightly above, but not enough. Not above the high, the range to really get the dollar rocking. And if anything, a little bit of disappointment in the non-manufacturing, otherwise known as the services PMI, the 52.7, lower than the expectations, but not much. But you know what? With the build-up of the dollar buying from Wednesday, looks like the market's backed out of that. And we now have a situation where we're sort of still on that knife edge. Right, if I just come over to the currencies, it's a little bit easier to see. You can see the dollar here. It wants to go up, right? Euro wants to go down, or like this is where the pressure in the market is, right? This is where the stop losses will be. Sterling, well, we had a flush out. The Bank of England raised by 0.25. They're going to be watching the market quite closely. It was a slam dunk, knee-jerk reaction, massive dip, straight back up. Now, if you think trading that is fun, you can think again. I've heard a few sort of sorry stories just around where the liquidity gets drained from the market. You can get flushed out before anything happens. Now, dollar Swiss still sitting there as well. Now, these are the four pairs or four instruments I've been sort of watching very closely all week, right? Because they have the best trending setups. But as we come into Friday's trading, let me just change the pen there. You've got the Aussie and the Kiwi. Well, they're both, the Kiwi sort of slightly through that long-term support, as is the Aussies there as well. They are primed for a move to the downside, as is. Well, sterling needs confirmation. Euro's ready for a beating, and the dollar could easily go up. What do we need for that? We just need a strong US dollar outcome on the non-farm payrolls. That'll do it, right? But what's the backdrop of this? Well, the backdrop is a lot of the US numbers have been weak, right? We had the strong, like, third tier, if that, employment numbers on Wednesday, which got the market excited. The jobless claims, not so exciting. So now it comes down to the non-farm payrolls, and this is where we may get the flush out. Now, don't forget, like, the CPI is the main game here, not employment, right? Employment's a part of the big picture, but it's not the big focus. Now, you're going to be looking at a number of different things here. Now, average earnings, I'll focus on the US numbers first. I actually think trading the Canadian employment numbers is a much better opportunity, especially on the Canadian crosses, and I'll come to that. But you got these three numbers, right? Now, the expectations, very important, 4.2% for the average earnings. Now, this is the third number you probably want to have a look at. It's not the most important. Number one is the non-farm change, two, the rate, and then three is an afterthought, the average earnings. Now, for the non-farm payrolls, we're looking for a change of 200K. Now, previously it was 209, and you've got your range here, right? Outside the range would see a bigger move. The rate, 3.6, 3.5 to 3.7, the range, and 3.6 previously. Now, to me, I think those Wednesday numbers were a flash in the pan. I just don't know if we're going to see if we can get any more strength out of these employment numbers. So I was just showing you there on the charts, right? We get strong numbers here. So a bigger number here, a lower number here on the unemployment rate, and a stronger number here. So you're looking at 4.3%, say up towards 300K and back at 3.5%. We'll get the strong dollar move. It means the Fed may be pushed into doing another hike. Well, that'll be the perception. And that's where we get the trade that goes with the trend, the buildup of the trend, right? And it flushes out the weak dollar move. Okay. And what we'll see, as I said, is we'll see a clean move down in euro, sterling, Aussie, and Kiwi. We should see an upward move there in dollar Swiss and the dollar index. Is this on the cards? Well, it's a possibility. To me, the data's backing out. It's getting weaker. And all we've seen this week is a little bit of a flutter. The dollar is still in a downtrend, right? Until these things are clearly broken, the dollar is in a downtrend. So I'm thinking, as much as I'd love to see stronger US numbers, I think we're not going to get it. Right? That's just my gut feel from the last couple of months of data, the CPI dropping, everything impacting. Yeah, sure, there's been one or two numbers that have bounced back, but they're second, third tier numbers. They're not that important. So unfortunately, we won't get the answer with the non-farms, but it will create a bit of discombobulation potentially across the board. And on that, when you are looking at the numbers, now, if you've got to factor this in as a possibility, we could get a stronger payrolls. We could get a higher unemployment rate. You get this discombobulation, right? You get flushed out of trade. So this is what I'm starting to think. Okay, it's like there's so many assumptions with the US numbers. You come into the Canadian employment numbers, right? And there's so much activity on the US dollar major currency pairs and equity markets that it could mess things up. Stronger non-farm payrolls, equities will go lower again. That's sort of the way it is. Weaker non-farms, higher equity markets, US equities. The employment change, the Canadian employment change is much easier. Okay, you've got the rate and basically the employment change. Okay, you're looking for 21,000, previously 59.9. It was a really gangbuster number. So they're expecting some sort of correction there. The range minus 10 to 45, the rate 5.5%, and there's your range 5.4 to 5.5, right? So they're expecting a slightly higher unemployment rate and not as many punters. Now, the chance for this to be stronger, I think it's a high possibility. Looking at, say, getting a 5.4 and a number up towards 45,000 gives us a strong CAD outcome, right? And if you come over here and have a look at dollar CAD, right? And if I have a look at the, we'll just have a look here on the daily charts, the way this is rolling out, Aussie CAD is breaking down or starting to break down. Kiwi CAD is ready to break down. Stronger Canadian numbers means the Bank of Canada may have to, potentially raise rates at some stage or keeps them on hold longer. And that interest rate differential should be enough to push down Aussie CAD and Kiwi CAD. Now, don't forget, both Australia and New Zealand, the numbers have been crushed, right? And the RBA didn't raise rates. There's a whole lot of negativity on those economies. So I think they're primed. Sterling CAD, mate, look how elevated it is, right? And we've just seen a rate hike from the Bank of England. Now, this Canadian number could really flush or push down Sterling CAD. Euro CAD, well, it's there, but it's not quite at the trend line. And, well, then you've got CAD Swiss. I'd leave CAD Swiss out of it. I like the fact that Sterling CAD, and in particular, Aussie CAD and Kiwi CAD have got really good profiles here to be attacking the Canadian employment numbers. And if you want to sort of drill into it, you go into the hourlies, right? You can see this a little bit clearer. You may be looking either at just trading at market on the release because Aussie CAD, there's no sort of real support trend lines to look at. Kiwi CAD, well, downside, same sort of thing, right? So focusing on your daily chart, hourly charts, see if you can find specific entry levels that you can work with. But to me, the Canadian employment numbers are a better opportunity than the non-farm payrolls themselves. Okay. As I was saying, with the if I come back into the hourlies here, looking at the global markets. See how these equity markets have already rolled over. Okay, the just beating down some of these down through these support trend lines, and they are just taking out stop losses. Will this be continue? Well, it will, as I said, if the non-farm payrolls numbers are softer. Okay, and that's if they are stronger, I should say. Just thinking about something else. So that's where we are on those. Gold, well, it's crunching through these support trend lines. And if you have a look here on that last one, look how much price action is around that. It's almost primed for a move lower. False break there on oil. There we go. Euro down, dollar wants to go up. So we're in a phase here where the dollar has been in a downtrend. Okay. And we've just had some sort of like small conflicting numbers to sort of push back against that trend. Are we really going down? The non-farms will give us some sort of clue to what is going on. As I said, like weaker numbers, okay, weaker dollar. And we should see things sort of fall over. Stronger numbers pushes the Fed back into a corner, and we might see some activity there. Now, when you're looking at a page like this global markets page, the things I'm looking for generally are let me just scroll that back up. Okay, so I look at throughout the day, the percentage change in the US equity futures, North American equity futures, that should roll through into Asia and into the European equity markets, right? So think of the equity markets as one big pocket with different hours, right? And they're the different time zones. So does that roll into, we've got a bit of a positive outcome here on the US equities? Have we seen that on the pairs? Well, we've got a risk on situation here. Euro, sterling, Aussie, Kiwi going up. The other pairs, well, it's pretty undefined at the moment. But when I sort of look across the major currencies, right, I am starting to see a sea of red here on the yen. Yen's falling against a whole range of things, as is the Swiss. Okay, so, to me, Swiss and the yen are the safe haven trades, right? So maybe they're rolling out. The one big push, the yields, US Treasury yields have been going up, price going down, yields up. And that's a bit of a focus there for the financial markets as well. But when it's all said and done, it's just going to come down to these numbers, okay? And if I come back over to trading economics, okay, you can really see what's what here. There's a whole heap of data coming out, right? Differentiating the Canadian numbers from the US is a good idea. Now, if you've got a good feel for the majors or one of the majors, well, that's probably the instrument you're looking for. To me, as I said, the Canadian opportunity is easier because there's less to think about, right? It's just the previous, I should say the consensus, the employment change, unemployment rate. That's all you're going to look for. Whereas with the non-farm payrolls, you've got the rate, the payrolls, the earnings, and then you've also got the chance for a whole bunch of these little components popping up. Anyway, it's not the be all and end all, right? So just be aware of that, because as we go through the data, you start to look for the US CPI numbers. That's the real numbers, and they'll be out next week. Okay, August 10, next Thursday. And there they are, right? I'd love those to be coming out now because we've got all these technical levels really set up. But unfortunately, we've got this is like a UFC event, right? The non-farm payrolls. It's tumble, crash, burn, liquidity issues, lots of volatility. If they all line up, you get the move. But I tell you what, it's a hell of a wrestle to get the trade on. And that's why I'm going with the Canadian numbers. All right, guys. Anyway, enough waffling from me. As you can see from the t-shirt here, do simple better. That's how you're going to make some cash. All right, guys. Have a good one. All the best. Cheerio.